The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble level and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So let's check, see if this is updated. Got about 3.5 billion shares, so it's going to be a very light day as we had some things, again, hit higher highs, kind of come off of them from earlier in the day. And actually, of course, we were off lower lows earlier in the morning. So just not a lot going on today. Everybody kind of waiting for the G7 meeting. We've got, one capitalist, 2 communists, and 4 socialists, and maybe 2 capitalists. Anyway, they're all meeting up in Canada today, and everybody yelling and screaming because they're on the gravy train of China exporting huge amounts of steel. And you just let that boat go into your harbor and then send it down to the United States, and you make a little bit of cut for not doing much of anything. And, of course, they don't like those steel tariffs. And, of course, because they wouldn't say that they wouldn't export any China steel, they're kind of going around all over the world. So we'll see how everybody's going on, and a partridge in a pear tree. Let's go to Larry early on from Cheyenne, Wyoming, about Tesla. How you doing?
Well, I'm good. How you doing, David?
Another day in paradise.
Yeah, isn't it though? Well, I'm having fun regardless. I got a sort of, on FXI, it's a sort of what the fatootie is going on question, and you're better than the internet, so here's the question. Why the heck, how do market participants in the ETF, I've just realized I've never understood this and I can't get clarity. Well, how do they know what to trade off of if the futures markets in China are closed?
Something about Tesla?
FXI. I can't understand why it's trading what does it trade off of, the market participants trade off of if the futures are closed in China?
That's a good question. I'm not that big of a currency trader, so not something I run across.
It's the China fund, David, the FXI, like Shanghai.
Okay. The engineer had Tesla up here, and I didn't have any time to get ready for this. Okay.
I'm not trying to trick you. I just don't understand what the heck
I'm just confused
FXI ETF trades off of. If I can understand it gaps up and down based on, the active hours on Shanghai, but what the heck does it trade off of on a Friday afternoon?
This investment seeks to track the investment results of the FTSE China 50 index, composed of the large capitalization Chinese equities that trade on the Hong Kong Stock Exchange. Fund generally invests at least 90% of its assets and securities of its underlying index and depository receipts representing securities of the underlying index. The index is designed to track the performance of the largest companies in the Chinese equity market that trade on the Hong Kong Stock Exchange and are available in the international. So the question is, how does this trade in the United States when they're actually closed to the underlying here? Yeah. And it's the same way that ADRs here in the United States trade for companies that, like in Europe, that are closed now already.
I don't get it. So do you understand it?
They kind of guess. There's no real.
So it's a futures. They're trading like futures.
No, it's not. It's not so much futures, although they probably have options and or futures against it in the broad sense. For the most part, if you notice, almost all these ADRs have gaps in them almost every single day for
every day.
FX. Yeah. So that's kind of it. A lot of times what they'll do is if the market starts going up here in the United States, they'll put in half of that move up in a similar stock overseas. It's the same way ADRs trade here. They'll give a percentage of it. They won't give the whole thing. And then you get the gap the next day. And that's why the stocks tend to do it. They'll see how the market is trading and give you a portion of it, but not give you the whole thing.
Yeah, it's really strange. As the fog clears, as I learn more, it's like I realize what the heck really is going on here. Yeah, exactly.
So yeah, there's a computer that got some kind of algorithm. That algorithm depends on what they're going to give or what portion they're going to give to you. But they kind of look for stocks in kind. Yeah. And they kind of try to make the best guess and not give you all of that today.
Yeah.
Normally, like if you're trading ADRs, which is a real good one because you have both the European markets and the United States markets open at the same time in the morning, you should watch how those ADRs trade and then what happens at the break when they close at 11:30 each day. So that's kind of the best thing to do to get an idea how those things trade, and then you see what happens the rest of the day. But for the most part, they just look for.
And then on Tesla, just from an experienced trader's perspective, could you comment on? It looks like it's setting up a Gartley sell possibly, but my question was, on that big day up on 6/6, that was the news announcement that they're going to pull out the stops for 5K production per month end of June, and then the next day it was reported that they had major problems with the robotics machines to accomplish that. So how much time does it take for the market to factor in that kind of possibly gutting news?
Well, with machines today, it happens almost instantaneously. I mean, they're machine learning algorithms that just look at the headlines and trade off of them instantaneously. Before you could ever humanly read them.
What I mean, David, is when will the stock react to the bad news in terms of traders saying we got to get out of this? He's not going to make good on the promise.
That's a much bigger question. And almost always that is when when shorts quit shorting it.
That's how you view it. I see. Okay.
Yeah. Here's the thing. You've got, especially when you got a lot of shorts in a particular stock, all it takes is one good piece of news to start running a handful of shorts, and then the rest of them start covering, right?
So you interpreted the good news, conference call a short covering event, basically.
Yeah, that's about it. Okay. You want to hang on through the break? We'll talk more about this because it is a very important thing to look at. But I'm going to go through and give you the numbers of what and how short Tesla is, and then some of the other things that I look at. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And hopefully we still have on the line Larry. You there?
Yeah.
Okay.
Yeah, thanks.
Here's what you need to be looking at, and you can find, I'll tell you where you can find this, which is the same data that's on the Wall Street Journal's website. If you go on there and dig in under data, you'll find that they show the bi-monthly short selling numbers on it. Every 2 weeks, that's updated. In fact, let's do this because I think I've got it. There it is right there. I will bring it up here for you. This is what the page looks like from the Wall Street Journal. Now, normally I publish highlights about what's going on, but it does follow a little bit behind time. The last data that anybody has is from 5/15. So every 2 weeks, they show how many shares are short in a particular stock. And you, in fact, on this page, you can go back 4 weeks, but it always trails a little bit. It's like a week, 9 days, 10 days behind by the time you get the data. And the people on Wall Street get the data a day or two before you. So they know a little bit more about what the condition of the stock is. But I'll go back and show you what I look at, which is right here. We've got short percent on Tesla right now is the last reporting date was 31%. And with the volume, the average volume for the last 30 days, it would take 5 days for every short to cover if the volume just stayed the same. So if the stock goes up suddenly, you don't have a lot of volume. Everybody's got to crowd out the one fire exit in the theater, right? So if you scream fire, what happens? Everybody tries to get out the door at one time. They're pretty huge. Normally, you don't want to be in stocks that have more than about 10% short interest. And even that's kind of like you like to have no shorts So when the surprise comes, all those people are not down there waiting to cover at a lower price. So the big gaps down tend to be when everybody kind of gives up. It can still go down, but if you make your trade or your short when everybody gives up, then you have the opportunity of having that big run. It's kind of like catching a football and everybody's on the right-hand side, you just run on the left-hand side, right? So it is that. Now, they do publish that data, and again, when you're looking at pretty much more than 1 or 2 days to get everybody out the door, any kind of news can really run the markets. Now, on the opposite side of this number on this is the daily short selling numbers, and that comes from FINRA, FIRNA, which is the company that's supposed to be looking out for you and me as a retail trader. It's dubious on how much effect they actually have on the really large folk, but they do have a lot of data on their website, and you can check it out. But every day they publish 3 or 4 different text files, and those text files have the short selling amount for each stock each day. So yesterday, there were 24% of the orders started with a short sale. Doesn't mean that they went home that way, right? They may have been short intraday. The market makers may have been short for a reason to continue the market moving. But you'll see that there's some kind of baseline if you watch these numbers over the days, and it's about 10% on Tesla. About 14% of the trades yesterday were people shorting Tesla into the move higher. The day before it was 21%, 25%. If you look at it like a Dow stock, it's normally 5, 6, maybe 7%, and half of those are probably the market makers too. So when you see these big numbers, you know that I've got a spreadsheet each day that I have in the newsletter called the most hated. Well, I call it the most hated. Let me pull that up real quick too, so you can kind of see what I look at each day. Where is that? Okay. Short sales. Okay. Come on, there we go. Unfortunately, I can zoom in here a little bit. That's a good. Anyway, each day I publish the highest one, the short sales percentages in the S&P and in the NASDAQ in the newsletter. But like Netflix, 25% yesterday, Tesla, 24%, NVIDIA, 24%, Amazon, 23%. CSX, I think, got a beating. It got 20. You'll see the usual suspects in there almost every day. And what you want to see, or even like on Tesla, I shorted it at $360 a while back, covered at $360. You can go back and find that in the chart. But what happened was the normal 25% short went down to about half that. It was about 12%. It went for 2 or 3 days. The stock went up, and no one really hopped on it. It got up to the previous high, no volume, so I went ahead and pulled the trigger on it. But you got to time the chart with the short sell numbers in it to figure out what the risk is in that stock, right? I did the same thing in Boeing. I think it was, whatever it was, 360. And normally you wouldn't short those stocks, but once everybody gives up, you normally have a big move down. So it takes a little bit more work to find these, and you can play them 1 or 2 ways. You can either wait until everybody quits shorting, right, and short them, or you can find when everybody's shorting at the lows and go long them and wait for the squeeze like you had in Tesla.
Yeah.
So what you really want to know is if it's one of these really hated stocks every day, you gotta wait until those guys, the stock goes up or they get bored and go away, because it's all any. Let's say that you're a big guy on Wall Street, you got a lot of Tesla shares, and you want to get rid of them. Do you just go willy-nilly selling as hard as you can, or do you make up a lot of phony upgrades and have your buddies spread it around Wall Street and run the shorts out? And when that price is higher, you go ahead and here's some more. Here's another 1,000 shares. Here's another 5,000.
So, David, David,
Yeah.
if the pattern of a Gartley sell does form in the next weeks or over time, and you get confirmation that most of the shorts have been run out, is that how you compound your decision?
Yeah, you need both of those things to line up. You need to figure out that let's say it'll be a day or two. We'll get the next round of bi-monthly data. And then you want to look at this daily data to see whether or not people are getting out of those stocks. Hang on just a second. I think I got it here. Okay. The least shorted stocks yesterday was Fox with 2%, and Autodesk with 5%. Dollar Tree with 5-6%. So that's kind of like the minimum on a daily basis. You're going to see those people come in. Xilinx with 5%. Those are the kind of the low end of it. At the very high end of it, you're going to see these 25, 30, 35%. It's what you see in Snap. If you go back and look
thank you. I forgot why I called, but thank you, really. Thank you.
Okay. Bye.
Okay.
We'll be back.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And, yeah, I've been accused of when asked what time it was, answering with how to build a watch. But yeah, it just, I mean, when you get into those, especially these highly shorted stocks, I mean, you really got to know how many people are on each side of that tug of war, because it becomes a whole lot less of what's happening fundamentally for the stock, and a lot more about who can push who off the diving board in the pool, or and you know, if you're out there on the end of the diving board and there's someone behind you, my guess is you're the one that going into the pool. So you got to know where you're at when the games start. So give me a call, 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. So what do we have coming out here today? Well, if you look at the volume, certainly it is a typical Friday in the summer. 3.8 billion shares so far on the CBOE market volume summary. So what can we say about that? Well, when we were up at these levels previously, you wanted to see something, you probably wanted to see something like 10 to 12 billion shares. And, you know, we've got about 1 billion shares more on the down days than we do on the up days. So certainly the market is not strong up here. I think it's rather brittle. But it may, highs sometimes just take a while. Everybody, when they're euphoric, it's hard to get everybody off that euphoric bend. But you notice that when the volumes really start to decrease, the ability to drive these stocks like they have also decreases. I don't see a lot going on out here. There's a handful of stocks that were highly shorted that were popping, that they were popping today. But let's go ahead and look at some other ones. One of the bigger moves down today, at least in the ETFs, was the semiconductor holders. And the reason for this is a few things. AVGO, Broadcom, came out last night with earnings. They were guiding down fairly significantly. We'll look at that chart in a minute. Apple's also saying they're only going to sell about 80 million iPhones compared to the 100 million they projected. It was down $3. That's not a whole lot. But again, the problem with trying to trade Apple is that you've got William Buffett against you, and all he has to do is buy a few shares. He's got the cash. He also has one thing that you do not know he has, or probably don't think that you know he has. He's got the biggest options house in the world up there in Iowa. There's 4 buildings next to his equity long-term holding building. He once called these, and his Charlie Munger, his buddy, once called these weapons of mass destruction. And guess what? He's now the biggest seller in the United States of these and has the biggest operations for market making. Since he's going to hold these stocks and he's not going to get rid of them, he is more than willing to take all the cash he can get. And guess what? When you own such a big piece of a company, you can pretty much manipulate the price of that stock fairly easily. Someone asked me where I thought Apple was going. I said, well, if you would have asked 3 or 4 months ago, I could have given you a much better indication. But this is, I think Apple's now in the category that Goldman Sachs and Morgan Stanley are in, which is you're up against the finest manipulators that there are in the market. Jesse Livermore called them operators, and I just try to stay away from them because these are the guys that can have 5 people upgrade a stock or downgrade a stock in a day with a single phone call. It just seems to always happen, and other things like that. So, yeah, well, everybody talks about buyback programs. The reality of buyback programs are that they are a threat. Less than 10% of the shares ever allocated for buybacks are ever bought back. And the highest one ever was Boeing. I think Boeing bought 18 or 21% over a couple of years, and that was the highest one on record. So when you see $100 billion buyback from Apple, if 10 billion ever gets bought back, What that is an implied threat to anybody that would short the stock. That's all it is. And my guess is that maybe you get 2, 3, 4% of the shares bought back. And guess who ends up with those? The CEO. He's got some kind of share thing, and they go ahead and give the ones that they bought back anyway back to him, and he'll hold on to them. So it's kind of a circular nature of the proverbial python eating its own tail kind of thing. Anyway, back to the semiconductors. There doesn't look like there's going to be any big business in cell phones until after the first of the year. We first heard this in the earnings call from Best Buy. Now, a lot of people made excuses for Apple and said, well, you know, Apple was selling a lot of those phones directly. Best Buy just said, you know what? A lot of our money is in this business of selling iPhones and Samsung phones, and that business is down across the board. A lot of analysts paraded themselves, did their little dance on the catwalk. On the catwalk. Oh. What is that? Who shot Frankie? Or I'm trying to remember who that one-hit wonder is. Anyway, they did their little dance on the catwalk, and made a lot of apologies for it. Yeah, I kind of knew that this was coming in Apple. The problem is, who does it hurt? Well, I'll guarantee it hurts Best Buy, although they're a little up today, but on no volume. This thing at about 74 is probably a screaming short. We'll take a look at that. After the bell last night, AVGO was out, and of course, they're telling everybody what everybody already knew, and that is the business is down. If you want to look at this, it didn't quite get back up into this March 13th high on Avago, but it was down on 4.8 on my power vector indicator. If we look at the May 4th low back up, it was a 3.4. So this thing was off about 30%. I'm going to say 30, 25% on this leg up. There just wasn't any energy. So this kind of this pattern, we've been showing this the last couple of days. It's been incredibly lean in the energy, and it wasn't all after June. A lot of this actually was in May that we made those lows, and there wasn't really any energy coming back up. So I think at best you got to say that we're in some kind of bigger trading range, but certainly these stocks have problems. What else? Any stock that depends on memory also has been hit fairly hard. If we look at Western Digital, going to the break here. Western Digital came down fairly hard yesterday, $80.74. A little bit of sideways action today, but no volume. 8.8 million shares yesterday to 1.9 million shares so far today. So again, a lot of gaps below, not a lot of energy on the way up for these stocks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're up 6 on the S&P cash, 52 on the Dow, up 11 on the NASDAQ. Volume continues to be a Friday-ish volume with less than 4 billion shares so far today. I had a request to take a quick look at NVIDIA. This is the strongest in the semi space, and it's a little weaker. But as the strongest stock in it, this thing kind of looks like it's topped out. Would I go short it? The answer is no. There are much weaker ones out there. The other one kind of pushing on these highs has been Micron. It gave a monster sell signal, though, and that is the test of $63.42. That was the March 13th high. That had 142 million shares into the high of the 30th of May with 84 million shares. So a little bit more than half, but about the half. You gapped down. You had not a lot of, well, you had some decent energy. Now you're back up with 42 million shares again today, but that's compared to the 101 million shares on the way down. This is actually about where, if you were fairly bearish on this one, you would think it. The problem is that you just don't have that much to the downside. Take a look at Intel real quick. Intel has come back off. You need to close below 53.48, and then that gets you back to the $50 gap that goes back here to April 10th. So you've got that. Microsoft, MSFT. I'm looked at the options at this one. Pretty good indication this one is going to close somewhere around 100 a week from today. So there isn't a lot of money, I think, to be made in Microsoft. You got a little bounce out here today. You were down on 28 million shares yesterday. You're up on 13 million shares so far today. So I'm just figuring that the strongest of these are probably going to fade a little bit. The weakest are going to be, of course, anything in the cell phone, SWKS, anything in the cell phone business part. You basically got your retracement yesterday in Skyworks Solutions up to the 618, and it failed. It pulled back in. You're back lower today. I would say that most of these, with these numbers, are going to retest these lows. That's the April 30th low for Skyworks Solution at 85.81. That's right. So 104 for the spike high to 85. Pretty good trading range out here. The question is, how long does it take to come back here and test it? Does the market just ignore the fact that Apple got a 20% haircut on the phones it's going to sell this year? You know, it would be different if this was Tesla and it had a mountain of shorts in it. It's got enough of them in it. But my guess is that these all will come back and retest the fairly recent lows. There's just nothing in the semis out here that changes that quickly. Another thing you can say is that the picture isn't any different for Samsung. So if you're talking about the big money in chips, it's for the flagship phones. If you're talking about a $50 or $100 phone, if it was free and they sold all the parts, and it would cost them nothing, the most that they could make was $100. You know that's not true. In fact, the cheaper the product, probably the thinner the margins on it, most likely. And I just don't see any way out of it. Anyway, these looks like pretty decent ABC downs. And if you actually look at Skyworks Solutions on an ABC basis, this has a 1-to-1 to $74.35. Now let's go back and see if there's anything back there at $75. Well, there you are right there. That's the bottom of this big gap that comes up from the 20th of 2017, actually January 20th of 2017. You were up on 15.8 million shares that day, and you're kind of down there at the bottom. You know, I would say you've got every indication of fairly decent top. You may not get all of that 1-to-1, but I'd say at $80, you got a fairly decent shot at Skyworks Solutions. Do we have any more emails here? Yes. Okay. Spotify. What is the symbol on that? Spotify. The spot. Should remember that one. If I lose if I lose connections here, apparently we're getting in for some really stormy weather, and I think I've got enough time to get off. But I'll be back at 3:30 with Tom O'Brien. Hopefully that'll be yes, out damn spot. Well, it's a good one to look at. Thanks for pointing that one out. This one is testing the 171 May second high after its IPO. That had almost 7 million shares. You're into it today with 2.2 million shares. So again, a lot of these stocks, I imagine I'll have a ton of them for you come Monday. Do we have enough time to start going through some of these other ones? I think we do. Thought some interesting stocks that caught my scan have been out here, and that is Kamiko. And this one's going back into this gap down this huge gap down that came on the 1st of February 2017. We're just back up to this resistance level now. It's been spiking that a few times. I don't see anything that says that this thing, you know, you had a couple of good days of volume, but 6 million shares, but that pretty much just got you into the gap. To Dun and Bradstreet Corporation, this one was kind of interesting. I want to see what it was doing. Light volume stock, but it's going through the March 14th high. It had 300,000 shares. Today we have about that. So that one looks a little bit better. What else did we have out here? Restoration Hardware. This is another one that looks fairly interesting to me. It's going higher, but you wanted to see this thing go through the December 6th high of 2017. That was 109.53 with 2 million shares. Over the last few days, 1.1 million shares, 800,000 shares. Today you got 900,000 shares. So a lot of these things are just turtling, going above the previous highs. There just isn't any juice behind it. they will probably come back into the trading range. I think there are better shorts than this one out here, but even the ones that are breaking a little higher aren't showing that much. Let's take a look at Yelp real quick. Was wondering whether this has the volume. It certainly looks to me like this one is going to break out this $40 low from April 2nd. That would take you back down to the $37 low on February 9th. So there's a little left in that trade, but like I said, a lot of them back up here at highs. Let's take a quick look at the XLK. Got a couple of angry candles in the XLK out here, so we'll see what comes on it on Monday. Any close below 71.12 would be a sell signal. No energy off this last April 25th low.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we're going into highs on a lot of these stocks today. Volume's about half of what it needs to be on the total market at this time. We should be pressing them about twice this. Of course, Friday, light volume. Maybe we get the volume on Monday. I am speculating that we will not. Of course, the most important chart to look at and keep an eye on is these QQQs. You had no energy off this April 25th low. You had a test of the previous high of 55 million shares on March 13th. You did so with 40 million shares on June 7th. So you got no juice. Yesterday, you were basically down on 40 million shares. And even if you wanted to be even less considerate to the previous high, you can say that the up day into that high was only on 25 million shares. So half the volume. Yesterday, volume increased, but still 15 million shares lighter on the downside. Today, you got a little bit of a bounce. But I suspect that all of these charts say that we're in a trading range, and that trading range would take you back to the previous low on the QQQs. That's the 156.47 level. So we'll keep an eye on that. In the bottom of the next hour, we'll be on with Tom O'Brien. We've got a lot of stuff to talk about in technology. It was a busy week, so we'll have some things that probably that most people aren't talking about, that maybe you can connect the dots backwards and make some money on. In the meantime, what else would you want to do? I think you want to listen to Tom O'Brien in the next hour. Like I said, we'll be in the in the bottom of next hour with him. But that's about it. We got a light volume market, and a lot of these stocks going to probably give a fairly interesting signal when I do my scans tonight. In the meantime, sell when you can, not when you have to. We will see you here on Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.